the small cap indices, individual stocks saw cuts of about 8 to 10%. Was any of the selling related to margin traded funds, margin traded, the leverage trades?
Right. And that's been the biggest worry, right?
That's been the biggest worry.
Margin, that margin calls were getting triggered. And did that contribute to the kind of exaggerated fall that we saw in the markets? A very interesting discussion. We're joined by Shripal Shah, MD and CEO of Kotak Securities. Thank you so much for joining us, Shripal. First up, give us a sense of what exactly transpired, especially in the last two trading sessions. What is it that actually happened, especially in terms of margin calls getting triggered? Could you quantify it? Could you give us the extent of what exactly, and what kind of stocks and from which universe got impacted more?
Thank you, Vivek. As you know, margin trading finance investors are able to enhance their buying power. They put part of the money and balance is lent by the brokers. This entire MTF book for the market as we speak today is around 78,000 crore. And this book has not moved much. So to correlate to the current market fall would not be appropriate. In fact, what we see is that the number of margin call at a broking firm are in line with the market movement, and it is not in disproportionate way because of the MTF book. So MTF book is almost steady and it is actually reflecting the market movement in terms of the fall in the nifty value versus the MTF book value.
Okay, and you're saying that in the last couple of days, it's not that leverage trades was sold in an accelerated fashion and the MTF book continues to stay the same at 78,000 crore. What was the number at its peak, the MTF book?
Rima, we saw around 85,000 crore of MTF book somewhere in September or October, which stands at around 78,000 crore today, which is around 9 to 10% fall. And if you look at even Nifty level, which peaked out in September, today Nifty is down 10 to 12% from that level. So if you look at it, MTF is actually reflecting broadly the market movement and the sentiment. At the end of the day, MTF is a leverage product and it is a bull market product. If sentiments are good, investors are confident of returns on the stock, they will get into MTF as a product.
Right. Thanks for that, Shripal. We're also joined by Dhiraj Relli, MD and CEO of HDFC Securities. Dhiraj, would you concur with what Shripal had to say? He believes that maybe not all of the fall that we saw in the markets could be explained by margin calls getting triggered. What is your sense? And do you feel that, especially in the last two trading sessions where we saw an accelerated fall, did quite a few client books get liquidated?
Yeah, thank you for having me. I think my views are very clear on that. MTF margin calls do not make significant impact when it comes to the broad markets, but stock-specific impacts are definitely there. What we have seen in the last few months, after peaking of MTF book in September 2024, around 83,700 levels in the Nifty in NSE, it has corrected to 20%, now close to 67,700 levels on February 10th. So if you look at from that point of view, the book has corrected 20%, and it has its own impact on some stock-specific corrections, but not on the broader markets.
Dhiraj, you want to tell us some of these individual mid-caps and small caps where we have seen unwinding related to this?
Yeah, absolutely. HNIs have been taking more positions on mid and small caps. Unfortunately, despite the entire industry top of their voice have been cautioning them on the valuations concerns, but they have been more taking the positions, and that to leverage positions in the mid and small caps, largely in the mid caps. So that's where we've seen a steeper correction. If you look at NSE 500, from their peak respective prices, average corrections are about 31%. And that gets reflected in the pains in the portfolio of most of the retail and HNI investors. And those who have leveraged positions, their pain even get accelerated and accentuated with the interest burden they have to pay on MTF calls.
Shripal, just to bring you back to the conversation, you told us that margin trading facility book is now down to 78,000 crore. Our colleague Nigel points out that as on Feb 7th, it was close to 78,100 crore, and 2 days back it fell as low as 67,000 crore. So what is the current trend? And in case there is further fall that we see in markets, do you worry that there could be further margin calls that could get triggered?
So yeah, what you mentioned is correct, Vivek. One day we saw a fall, but what happens is this is a book which is reported by exchanges on a daily basis based on the reporting done by each brokers. So broadly, I think we should look at the average book for a particular period rather than a day-to-day trend. It is possible that that reporting is normalized over a couple of days of reporting timeline. So I would say that 78,000 crore is the today's number as of yesterday, which is reported and which is available today morning. So the book has not moved much, and in terms of leverage, I think the good part of this book is that this even for the large cap, investor can leverage only up to 4x. So it's not that very high leverage product compared to say options and futures, where sometimes the leverage in the options market are far more than the MTF as a delivery product. So I don't find this being a too leverage play, and that can, causing any market fall or a trigger for the correction.
So Shripal, leverage for large caps was 4x. What was the leverage you were offering on mid and small caps? And would you now look to, just for the sake of, managing your risk, look to bring it down? Or have you started already?
Okay. The way it works, Rima, is that first and foremost, regulator has prescribed for each stock what should be the leverage, and that is defined based on the quality of the stock, the impact cost of the stock, and what is the liquidity of that stock. And after that, there is these multiples which are allowed as a regulatory mechanism. On top of that, each and every broker can have their own additional margin. And at Kotak Securities also, we do have our margins which are in some stocks more than what regulatory prescribed is. So it is a very normal practice and nothing too specific to current market trends. As and when there is a concentration of a particular stock goes up or the liquidity goes down, you basically look at the leverage which is being offered.
Dhiraj, Shripal tells us that this is largely done in a very orderly fashion. But what we've actually seen, especially when it comes to the price action, it does appear in certain cases, in case there is additional margin requirements not being met, there is significant impact, especially when it comes to stock prices. So how exactly is this managed at the broker's end?
See, the entire industry is expected to do a daily mark-to-market in MTF positions. To that extent, all brokers are doing daily mark-to-market. So there are no sudden or knee-jerk reactions we have to work on MTF positions. As Shripal just mentioned that it's not a significant leverage, I concur his views that this cannot cause a market level concerns. However, on a stock specific, yes, there could be a margin triggers because most of the opportunities identified in terms of potential gains are similar by many brokers, and they have leverage. They have allowed leverage positions on similar kind of scripts. So to that extent, if there is a significant correction, let's say a continual correction of 20-30% in 10-12 days, that's when there is a more pain, and that's when it leads to a more correction in the particular stock or script. And otherwise, it will not have any significant impact on the margin calls on the markets.
Right. Shripal, one last question. What is the repayment cycle like currently? Has that been on a rise, and should that be brought down as a safeguard? Your view on that?
So this is a product, Vivek, where client is able to carry on the position without any time limit as such. Each firm can have a different time limit prescribed, but this is a very liquid product. And in fact, if you look at this product, it is for the clients who are active in the market. So they actually look at their position and portfolio on a daily basis. So sometimes you don't even have to look at margin call as a corrective measure. Clients themselves actually end up reducing their position if they feel so, or they're bringing in the additional margin.
Okay, gentlemen, we'll leave the conversation here for now. Thank you very much for joining in. We will slip into a very short break. On that note, we'll come back with more on markets. Stay tuned.